Ladies and gentlemen, please come to the room so we can start. Appreciate it. And I want to mention an individual who really worked very hard for this program, and very privileged, Michael and myself, to have as a co-chair, Julapa Tatiani. Unfortunately, Julapa showed up here only for a very short period of time, but she has to travel today to Bangkok. Her father passed away, and on which our thoughts and condolences are with her. And unfortunately, she has to take the trip. Otherwise, she would have chaired the session and been in a position really to participate in the discussion. We're very privileged, Mike and myself, that we had the opportunity to work, and through her to work with other Philadelphia Federal Reserve employees and officers. And we're very happy with the opportunity for GIC as well to interact with the Federal Reserve Bank of Philadelphia. And in fact, GIC's office is located in the 5th floor of the Philadelphia Federal Reserve. With this, we conclude the program with a new session, the last session, the future of fintech and cryptocurrencies. And this is what we are really is the core of the whole conference here. Is there a future? Is there something that we need to say about what will happen in the coming years? Is there something that sticks out based on regulation, but also in terms of entrepreneurship activity? We have assembled a very good panel, and I'm not going to go through the introductions because you can see the bios in the program. Bill Nelson from the Clearinghouse will be our first speaker, and he will talk about what's happening in the space, and most notably the financial issues of financial stability and monetary policy. Bill?
Hi, thank you, and thank you all for inviting me. Oh, okay, great. Surely it's going to be down. Wow. Now I see what David was going through. So thank you. My remarks are going to focus on the financial stability and monetary policy implications of digital currencies. Do you want to fix that?
Let me try.
Sure.
Accurate control L. No. Sorry.
They're not very useful slides.
Sorry.
Yep.
So my remarks are going to focus on the financial stability and monetary policy implications of digital currencies, which I will compare and contrast to the implications of the inevitable eventual replacement of paper currency by digital transactions. A few disclaimers first. These are my views, not those of the Clearinghouse or its member banks. Also, I may sometimes say Bitcoin instead of digital currencies by accident, so when I say Bitcoin, please take that as meaning the class of assets we call digital currencies apart from central bank created digital currencies. Moreover, I beg your indulgence if I don't walk through the almost obligatory discussion of how Bitcoin is not a currency, being neither a unit of account, efficient medium of exchange, or reliable store of value. I actually wrote this earlier. So anyway, this has been covered pretty thoroughly now. No, it's not a currency, but it is, in fact, Bitcoin is simply a speculative asset, as many folks have said today. Like many speculative assets in the past, it is associated with a new technology that promises large and uncertain future benefits. Those uncertain future returns, combined with the lack of any anchoring fundamental value, leave Bitcoin particularly susceptible to bubbles, appreciations in value driven by nothing more than expectations of future price appreciations. In his book, Irrational Exuberance, Yale professor and Nobel laureate Bob Shiller pointed out that there were asset price bubbles associated with the advent of rail travel in the 1900s, mass production in the 1920s, and of course the internet in the late 1990s. But as illustrated by the relatively benign consequences of the massive decline in technology stocks in 2000, the popping of asset price bubbles is not necessarily a risk to financial stability. In general, for there to be a serious risk to financial stability, the assets have to be funded with short-term leverage, linked to the core financial system, and material enough to matter. Now, when I discussed these issues at the Philly Fed this past September, I noted that digital currencies appeared to have none of the requisite characteristics to be a financial stability risk. The asset class was too small, was not importantly funded with leverage, and was not connected to the core of the financial system. Then, as now, I hasten to add that there is very good reason to be humble about our ability to perceive financial stability risks. At the Fed in 2006, we were well aware that subprime lending standards were awful, and that private mortgage-backed securities were backed by those loans were overvalued. But the worst that we thought would happen would be that some investors would lose a little money. When I gave my remarks last fall, there was about 140 billion in digital currencies outstanding. By comparison, there was 800 billion in securities backed by subprime and near-prime mortgages outstanding at year-end 2006. Now, there may be greater reason to worry now. The market capitalization of digital currencies peaked earlier this year at about 800 billion. I don't know, I initially calculated. Virtually the same as subprime MBS prior to the crisis. And the beginning of trading of Bitcoin futures on CME and CBOE makes taking a levered position in digital currencies easier. Moreover, as became all too clear in the crisis, leverage isn't always easy to perceive. I was recently at a presentation by a startup planning to issue a new digital currency. The currency would be backed by dollar deposits and redeemable for $1. The young CEO promised that investors in his scheme would make a lot of money, although I can't for the life of me remember how. A member of the audience asked, "This is just a narrow bank with no capital. How will you meet redemptions if you make a loss? For instance, if you're fined for know your customer violations." And the CEO's response was basically, that's a good question. Nevertheless, the risk posed to the U.S. economy by digital currency still seem modest at most. Trading in Bitcoin futures has been light, and the market cap of digital currencies has declined by about half since January with no discernible financial stability consequences. Now, the most serious financial stability risks from digital currencies seem to be only possibilities, not yet realities. If a digital currency did come into widespread use as a currency, then we would be in a world where its value was relatively stable and it was seen as a low-risk asset. Otherwise, it would not be used as a unit of account and store of value. As we saw in the financial crisis, financial stability risks are concentrated in assets that are considered to be safe, not assets that are considered to be risky. If there were a sudden loss in confidence in the digital currency, savers and investors would switch rapidly to dollars. Financial institutions that were net long the currency would make losses, deposits denominated in the digital currencies would be withdrawn, and financial institutions would be unable to roll over short-term obligations denominated in the currency. The central bank, the Fed, would be able to operate as a lender of last resort, although only with difficulty. Consider a bank that has illiquid assets denominated in the digital currency and was experiencing a run on its deposits denominated in that currency. At least in principle, the central bank could purchase the digital currency in the open market, lend the digital currency to the bank, and take the bank's digital currency assets as collateral. But it would take time for the central bank to purchase the digital currency, and effective lender of last resort intervention usually needs to be fast. The purchases in the necessary size might be especially difficult if, as seems likely, markets for the digital currency were disrupted at the time. On the other hand, in this situation, there might be many eager sellers of the digital currency. Similar problems arise when central banks need to provide lender of last resort support in foreign currency, and the major central banks have established standing currency swap arrangements to facilitate such operations. In the digital currency case, however, there is no central bank counterparty with which to establish a swap on. With respect to monetary policy, if the economy operated partially in the digital currency and the public currency and the digital currency had a floating exchange rate, the central bank would be able to moderate the business cycle and control public currency inflation rate, but with less precision because of volatility coming from the digital currency side of the economy. In the limiting, albeit implausible case where the economy had converted entirely to a digital currency, The situation would in some ways be similar to the instances where a foreign currency had converted entirely to the dollar, or to the situation of an individual country in the euro system. The central bank, if there were a central bank, would not be able to stabilize the macroeconomy. Moreover, because the supply of digital currency is fixed or exogenous to the demand for currency, economic and financial volatility would be amplified. So while there are good reasons to doubt that digital currencies will ever displace government currencies, the continued decline in paper currency and checks as mediums of exchange appears inevitable. In the US, that decline will be hastened by the clearinghouses, my company's new real-time payments platform, creatively named Real-Time Payments, or RTP. RTP allows businesses and eventually individuals to send funds instantly and irrevocably from their bank accounts directly to the bank accounts of other businesses and individuals. While currently still in the pilot phase, we expect RTP to reach 75% of bank customers by the end of next year. RTP is the only real-time payments platform in the United States, although platforms have been created by central banks in the UK, Europe, and Australia, but evidently not Norway, as Jan said, contrary to his saying we're behind him. To the extent that digital payments simply replace cash and checks, I can see no material consequences for financial stability or monetary policy. Digital payments do not create a new asset or for speculation or create new challenges for central banks' management of the macroeconomy or role as lender of last resort. But if I can push a button and transfer money from my money fund into my checking account and push a button and make a payment instantly and irrevocably from my checking account, it seems likely it won't be long before I only need to push one button and the bank deposits become a transitory way station for funds moving from non-banks and then back to non-banks. Deposits could steadily and perhaps virtually completely shift to shadow banks, which, unhindered by capital requirements, liquidity requirements, or reserve requirements, are able to provide higher interest rates with at least an illusion of safety. This intermediation of banks by shadow banks does not present a challenge for monetary policy. The Fed would still be able to control interest rates and thereby the economy. The risks to financial stability, however, of such disintermediation are serious and all too well known. The financial crisis basically consisted of the collapse of liquidity transformation in the shadow banking system. To address those risks, the government needs to control liquidity transformation throughout the financial system, not just at banks, and the Fed needs the tools to be a lender of last resort wherever such transformation occurs. Thank you.
Thank you, Bill. And moving along, I think we would have the opportunity to hear from Isabelle, and trying to.
Having me here. It's good to see all of you in this room today. I'm going to start by promising to do my best not to say what everyone else has already said. We have covered a lot of ground so far today, so I will skip over some of the more obvious and repetitive parts. The first of which is trying to distinguish distributed ledgers from blockchains from virtual currencies. I do think that this is worth me noting, just so that you know the perspective from which I'm speaking. So I am not an economist. I am not with a company that's done an ICO. We do not even have a virtual currency. So it seems a little bit out of place that I'm here, but I think it does make sense, and I'll tell you why. So my background is I am a lawyer. I am also the head of regulatory affairs for R3. And we are building the technology that virtual currencies can sit on top of, distributed ledger technology. And it's important to note the relationship between them all. And that is because DLT is the basics of all the things that we've talked about today. So I think it's a useful perspective to talk through where we are, what we are doing, and kind of how it fits into today's conversations. Now the other point that I think is worth noting is that when we're talking about distributed ledger technology, there are so many different designs. There's so many different formats of it. So we at R3 have designed a specific implementation of it that is by no means the only one. We certainly hope that it becomes a widely used and popular one, but it can take a variety of forms. So there are the anonymous all-to-all gossip network blockchains like the Bitcoin blockchain. Ours is a little more specific than that, and that is because it has limited data sharing. Now, I'll talk about that in just a minute. But this is, since our panel is looking into the future, these are a lot of the use cases that people are working on today. And some of these are in the near future. So 2018 is the year that you will see enterprise versions of a lot of blockchain technologies being released. You will see the first real commercial deployments of products. And this number on the left-hand side is very interesting in that that's in the billions. $60 to $80 billion in cost savings from the first 4 use cases in red. And it's cut off at the bottom, but I promise that's not a number that we came up with. That's a number from McKinsey. That just gives you an idea of what this can be used for. So obviously, virtual currencies are one use, but the implications are huge for DLT. So to tell you who we are, R3 started as a consortium of banks. We started in 2015, and it was actually started when we didn't know exactly what we would do. We just knew that everyone had heard about this stuff called blockchain, and we wanted to make sure that we weren't going to miss out. So 9 banks got together to begin with in 2015. Quickly that number grew because every single bank is saying, I'm not going to bet the farm on this, but I do want to know what's happening. I at least need to track it. I need to keep up with it. I need to make sure that I don't wind up in a situation where I become a user of a system that was built by other institutions. So we quickly expanded beyond banks. We opened to, I would say that it used to be the financial markets more broadly. Now it's institutions and partners more broadly. We have over 200 partners and regulators, members and investors. And we're working on our platform, which is called Corda, as well as partnering to build solutions on top of Corda. So Corda was open source as of about 1.5 years ago, which means that anyone can be building on it. We don't necessarily know everyone who is, although we work with a lot of them. And we're working to deliver our Corda Enterprise in the next couple of months. Now, the importance of Corda Enterprise is that, like other enterprise solutions, when we're talking about the most important markets, the world's financial markets, sitting on top of technology, the expectation is, of course, going to be that you're going to have an enterprise-grade product. That means you have resiliency. That means that you have support. Every single institution wants to be able to pick up the phone and call the provider of the technology for help if something goes wrong. So that's what our enterprise version provides. And this is about our platform. So our platform, Corda, has a few very interesting aspects to it, and they are design aspects that have been around since the beginning of the consortium. So when we decided we were going to build our platform, initially we thought that it would just be another one of the platforms kind of in the mix with all the others that were being built. But then we got a real sense from our members and from the open source community of just how much demand there is for how Corda is built. And the key reason for that is that, as I said, we have limited data sharing. Now that means that only parties to a transaction and those who need to know can see information. The key about that is that as a group that started out being banks, well, banks can't be seeing all the transactions of other banks. And encrypting it doesn't solve the problem. What if it's decrypted? We can't have that information sitting on every single person's node. Now there's a positive to that, in addition to complying with regulation, and that is scalability. So if you don't have a full ledger on every node, it's a lot more scalable as a solution. It also has immutability, it has pluggable consensus, so consensus can be tailored to the network that you're on. And importantly, for this room, it has regulator nodes. So that means that regulators can actually sit right on the network. And they don't necessarily get all the information, they get the information that they need to get, the information that they have a right to get. And there can be multiple regulators on any given network, and they don't all have to see the same thing. So one regulator wants to see fields A through H. The other only needs to see fields A through D. That's possible on Corda. And we are, of course, working on interoperability, as is everyone else. That means interoperability between Corda networks as well as with other platforms. So since this is a panel about looking into the future, these are a few of our areas of focus in the near term. But one of the key pieces to all of this is oversight and governance. So our members from the very beginning are used to having regulators in the room. It's their expectation that we be transparent about what it is that we're doing, what it is that we're building, and that we get feedback, questions, criticisms, whatever regulators want to provide us, because we want to be completely open about what it is that we're building. And it is their expectation that because of how we've built this, and our expectation as well, that it facilitates compliance with AML, KYC, regulatory reporting, capital requirements. It makes capital management more efficient. Our system as it is isn't even just about facilitating compliance. It's about making it easier, faster, cheaper, more reliable. But what's key to all of these, and I think is key to the virtual currency world as well, is governance. We need to know who's doing what, who's responsible for what. What is my expectation when I go on a network? What if something happens? Who's holding back? And so we work a lot on designing governance structures. We work on doing the documentation, not only for our software, but for our business networks. And that will become a critical piece in how this technology develops. So predicting the future. This is not my specialty, but this is what I've been asked to do, so I'll try. As a lot of people in this room think, CBDC is coming. There are a lot of advantages to it, and I think that the key is that for us, in order to capture the most efficiencies of using DLT, we need to have cash on ledger. Now that doesn't necessarily have to be CBDC. It could be a variety of other chemicals. But CBDC makes the most sense and is easily transferable. As a lot of people have said, it doesn't have impact on monetary policy, and there are a lot of central banks working on it. Now, in terms of what is motivating central banks to work on it, I think there are a lot of people in this room who can opine on that much better than I can. But I think that there are a variety of drivers on it. We are working with over half a dozen central banks around the world, working to develop CBDC, working to figure out what it's going to take, trying to make sure that it can be used on our system, that it can be used on other platforms. How does that money move around? That's a big focus of ours. And that leads me to the next thing I see in the future, which is I don't think there will be just one ledger. I obviously believe in Corda, that's why I'm here, that's why I've been here for 2 years. But I think that we'll see multiple ledgers. I think that we will see 2, 3, 4 maybe prevail in the next couple of years. So we'll start to see some concentration. I think we've already started to see a little bit of that. And then in terms of deployments, what's going to determine what the first use cases are is what those, what the large institutions want, right? And that's a reality that people really don't want to talk about, but if you're going to put the money in to develop technology, it's going to come from the larger institutions. And what are they going to be looking for? To save money. So that's how we decided a lot of the areas that we're focusing on. But the other way to determine what's going to be the first deployments, what governments want, right? If the order is passed down from those on high that a country is going to put X, Y, and Z on blockchain by 2019, then we're doing that. So I think that those will be the two things that continue to drive where we go. But then fast forward, as this technology is more widely used, as it becomes less expensive to use, we'll see it start to trickle down. Then you can start applying everything that we've built to smaller use cases that maybe stand to save a little less money. Maybe they're just fun, right? But fast forward in a few years, that's entirely possible. And I dare not speculate about where virtual currencies will go since we do not have one, but I've enjoyed everyone's comments on that today. Thank you.
This is a DIY session. Let's see if I can figure it out.
Ladies and gentlemen, Yaya.
Gotta find my name. All right. And let's go to view. All right. Good afternoon, everyone. Great to be here. It's a wonderful conference. I'm going to talk a little bit about the illicit risk and some of the things that we're tracking. I actually come from a think tank in DC that focuses on national security. And we have a center called the Center on Sanctions and Illicit Finance, and I'm the director of analysis, and that's the lens through which I'm going to discuss really cryptocurrencies mostly, although we'll talk a little bit more broadly. In general, I'd say although the long-term systemic risks of cryptocurrencies are unclear, we've been talking about that, but I think in terms of what will actually happen, that's unclear. What I'm going to say is that illicit actors are likely to experiment with the technology to augment illicit finance typologies, right? There are ways that we see criminals, bad folks doing illicit finance, and they're going to experiment with new technology. Cryptocurrencies is not an exception. So the first question I want to ask is, who here, raise your hand if you've shot a gun before. All right, well, watch out for that table in the back. Raise your hand if you've used a knife before. Some of you, I'm not sure about your table manners. Raise your hand if you've used a computer. Okay, hopefully most of us are raising our hands. Right, what are all of these? These are all technologies. Key point here is what's important about a technology is application and use, right? Whether we're talking about something that is illicit or harmful, right? Technology is technology. People are people. What's important is how do people use the technology, or how does that technology impact people as they engage it? And if you really think that you have a handle on cryptocurrency technology or blockchain technology, I think you learn pretty soon that if you think you have a handle on it, you don't. We don't have a handle on what this is going to become, what's going to happen 5 years, 10 years, 30 years down the line. I would sort of liken to where we are to the metaphor that we always hear about, the blind guys with the elephant, right? Blindfolded men looking at an elephant. And if you're in the back of the elephant and you're sniffing around, that's what you're oriented to. You're going to talk about how stinky this thing is, this new thing is, as you're sniffing the back of the elephant. And if you're at the front and you're feeling its trunk and how useful it is to do X, Y, and Z, things that you've never seen before, maybe that's what's going to resonate with you, because that's what you're exposed to. I think all of us, and it's interesting at this conference, we're getting all these different perspectives based on our orientation, what we're exposed to, what we're interested in. No one really knows what this elephant is. None of us really know what it's going to do. So just remember that as you hear people talk about this stuff and as you're engaging it yourself, we're all getting just bits and pieces. The elephant hasn't even left the barn. If I can make up mix my metaphors. But what will I say? So in my work, I'm researching illicit finance. And in particular, I come from an investigative mindset. I used to work on counterterrorism. So I'm a researcher that is always looking for how people are trying to do things, how they're trying to how they're trying to hide what they're doing. Illicit finance, right? I deal a lot with terrorism financing and sanctions evasion. Kleptocracy as well, corruption. There are other illicit finance uses that I'm not going to go into, but the key thing we should understand as we think about illicit finance and cryptocurrencies and this technology, just get off the bat, cash is still king, right? So sometimes when there's so much interest in this technology, people want to find out, are terrorists using Bitcoin? Are so-and-so using this technology because it's so fun and so interesting? But really at the end of the day, let's just be clear. In terms of illicit activity, illicit finance, cash is much better than Bitcoin or really anything else. So cash is where most of the illicit activity is. But here's the thing, what does this mean for some of the illicit actors that are out there? I would say, let's take terrorist financing. I'll show you an example in a second. I look a lot at jihadist groups. I think that if we look at some activity, we're not seeing a whole bunch of use, but we're seeing methodologies on the horizon. We're seeing experimentation. And in particular, here's one example. So I remember in 2015 when I first started thinking about Bitcoin, people were saying, ISIS might be using Bitcoin. And then I tried to look into it and I could never really verify it. So I sort of just put that away. The press is always hyping up stuff. I don't know if terrorists are really using it, right? In 2016, I saw a news report, and it posted that this group in the Middle East is a designated terrorist group. It's based in the Gaza Strip. They are the jihadist variety, support ISIS and the like. They posted on Twitter this infographic, and it has several different types of missiles or rockets. There's a bunch of other information there, and it's a fundraising campaign. It says Equip Us. It's the Equip Us campaign, the Jata campaign, and at the very right bottom hand, the right corner at the bottom is a QR code, which I've covered up just in case people are recording this. I don't want you to donate to terrorists. That's a QR code. So I turned to my interns. Before we saw the graphic, I just read the report. I said, oh, look into this report. My interns pulled it up on Twitter, scanned it with a QR code. I didn't even know you could do that. I didn't know that's how you could interact with Bitcoin. They scanned it, and it went to blockchain.info, the website, and you could see the Bitcoin address that was soliciting money for this campaign. It was part of a broader campaign. They wanted $2,500 per fighter. That's what they were billing this as. You go to the Bitcoin address just in your browser, and you could see how much money they had raised. And for me, it was like a light bulb went off. I was like, whoa, wait a second. So these are terrorist fundraising. I can actually see the account that they're asking people to send money, and I can see how much money's in there, and when money comes in and comes out. And they were like, yeah. I was like, this is phenomenal. For an investigator, for a CT guy, I've never seen, especially not being in government, I can't go to a bank and say, hey, show me this person's account. But with Bitcoin, I can do that? Yes. It allowed for us to analyze it. So, spoiler alert, they really didn't earn much money. They got, this is summer 2016, they actually did earn about like a few $100, $600. So not a lot of money. So I would say this was unsuccessful. It's very easy for a terrorist group to just get a Bitcoin address and ask people to fund it, but it's much more difficult. One, does your audience really know how to get Bitcoin, right? There's an educational burden, and then can they do it without being identified? And that's very difficult, and you have to be very careful, and I think that's why we haven't seen much of that. But here's the thing, they weren't very successful, but this address still exists today. So I haven't been looking at this too much because this was 2 years ago. I looked at it recently, actually one of our interns, and they said, oh yeah, someone just put a few $100s in this address. We wrote an article about this in the summer of 2016 saying, hey, terrorists are looking at this, not being alarmist, but we should just know. So this was in the news. There was another campaign, a similar one, in Syria, a group of folks that are on Telegram that are raising funds for fighters in Syria. We wrote an article about it, put it in the cipher brief. The Wall Street Journal talked to the people running the campaign. You know, Wall Street Journal will just call you, hey, Mr. Jihadist, can you tell us? They'll talk to you. It was in the Washington Journal. We are monitoring that account. Those addresses are still active. So here's the interesting thing from a law enforcement perspective or counterterrorism perspective that's just so different, which is this is not like the old days. You could disrupt them in the sense of maybe publicizing and make it difficult for other people to fund the address, but that address 2 years later is still active. We don't control the private keys. This isn't like the bank where I can just take it down and get the funds, seize the funds. Even if they're not earning much money, someone still controls it, and there's nothing I can do about it, or nothing the government can do about it. So this is something I think that they will continue to experiment with. And with some of the campaigns, we've seen them tell their followers, oh, if you want to get Bitcoin, go here. You can learn about a Bitcoin ATM. You can do this and that. And then, of course, there are other more anonymous cryptocurrencies, and that's what's on the horizon that we're concerned about. Sanctions evasion. Sanctions evasion is something that we really look at. And one of the things now, I have this picture up here, which is Venezuela. They've launched their new cryptocurrency, a token on the NEM blockchain. And actually, I should have used a different picture for this. I should have used Oprah, and I should have had a headline saying, you get a token, you get a token, you get a token. Because in 2017, that's pretty much what happened, right? That's what has been enabled. It is now easy for anyone to create a token. So here's another experimentation. A sanctioned government, right? US sanctions, OFAC sanctions on Venezuelan government, right? Trying to find an alternative way to raise capital. Now, there's a whole bit of analysis about whether this would even work. My judgment is it's not likely to be valuable, it's not likely to raise much money. There's so many setbacks, right, as to why this will not work. Why would you invest in the petro, right, unless you had some sort of ideological, alignment with the Maduro government of Venezuela. So, but what we see here is it points to experimentation. It points to maybe lessons learned that other state actors may be looking at, and non-state actors. Because of the Venezuelan government, and I'll tell you from looking at this, it wasn't rocket science for them to create this token. There is a YouTube video that you and I could go to and use the same blockchain and create our own token. We don't even need coding, very minimal coding knowledge to create a token with today's technology. So this opens up this realm of people can use alternative methods of payments. So let's wrap this up. I would say that what we're seeing in terms of experimentation here for sanctions is not necessarily sanctions evasion so much, because I don't think they're going to raise much money. But what do we see here is the attempt to have sanctions resistance. The big thing about Venezuela is it was revealed recently that they're not doing this on their own. Venezuela is really getting some help from Russian startups and Russian actors. The ties to the Russian government are maybe unclear. There's some signs that maybe the Kremlin is sort of sanctioning this and supporting them. But this leads to the gap that has to be filled if state actors are going to do sanctions evasion with cryptocurrency. You can't do this in a vacuum. You can't say, Maduro can't say, I'm going to create my own cryptocurrency network and my own blockchain system. It's like saying you're going to create your own Facebook. Yeah, it's easy to say you're going to do it, but are you going to get other people to buy into it for it to really be a social network? That's where the thing to look at here is state actors cooperating, colluding, deciding. If Russia decides that they're going to put in a whole bunch of investment into this, maybe it has a chance of succeeding. So I'll end with this. What should banks be doing? Oh, actually, no, I'll end on a couple things. Blockchain forensics, right? That's a tool that we use to analyze a blockchain. We can talk a little bit about that, but I'm going over. In general, this is just a cat and mouse game that's going to continue. We understand how to look at the blockchain, monitor it, track it, and then people come up with more technologies that are more elusive. That's what's happening. Decentralization, who polices it? That's a huge question. And I'll end with this. This technology, I'm actually intrigued, I'm fascinated by the technology. As I've looked at it, even with my illicit finance investigator hat, I really appreciate what it offers. But I am concerned about what happens when you have decentralized technology that can't be interdicted for non-financial reasons. Take jihadist propaganda. Typically right now, what do we do when ISIS puts up a beheading video on YouTube? YouTube takes it down because of terms of agreement. There are projects to create decentralized content platforms that cannot be, that are decentralized. So there's no one person hosting the content. Now it's not widely adopted, but the old counterterrorism analyst in me thinks about, so what does that mean? If there's a centralized thing and people can put up child pornography and jihadist videos and no one can take it down, what does that mean? How do we deal with that? These are questions that are going to have to be discussed. So at the end, thanks, I'd say, education, understanding blockchain tools, and there's a gap between the tech community and the finance community. That's why we have this mismatch. And I think banks have to sort of engage the tech community more, understand this language, it takes time, but I think the culture of compliance which banks have maybe could be merged with the tech community as these communities engage. Short time, I ran over, that's it for me. Thanks.
Thanks.
Did I get Turkish, Mike?
What's that? Yeah, I got some prompts. So if we have time. So hi, my name's Mike, and I have additional disclaimers. I work at the Federal Reserve currently, and I love it there. It's fantastic. I really recommend you work there. It's a fantastic place. Disclaimer: yeah, the opinions are not. I would like to say they're not they're mine and not the Fed's, but I'm not sure they're mine. In other words,
Decentralized.
I love it, decentralized thoughts. And you see the topic I put up, and I'm not sure this is even the right way to describe it. And anyone recognize that that's a form of the Vitruvian Man? You know, do you guys know why there's a square and a circle around it? So in the ancient arts, the square represented the earth, right? Data cubes, and the circle represented the ether, right? Which in modern parlance would be the graph. And we're going to take you on a journey into the fifth dimension about 5 years out, right? So we're going to teach you how to think holographically while we go explore some unknown territories. And I'm not even sure how this presentation is going to work. So if it doesn't, and I'm an IT person, I'm not a policy person. We like to think big, start small, and iterate, and fail. So if we fail here, that's a success. We'll just count it as a first step. All right. So with all that said, do you guys know what this is? Anyone know what this is? All right. This is a proxy for the origins of money. There's an island called Yap, and on that island, this is what money is, right? And what it is, they didn't move them. They kind of just did a handshake, and they would pass ownership. And guess what? This looks a lot like. Can you see it? You see Star Trek? Because there's no money in Star Trek, right? So if you go back, if you define the Holocene, we're on some kind of fourth industrial revolution transition from money systems that are 5,000 years old into money systems that are going to persist for the next 5,000 years. Like we're kind of on some strange cusp right now, according to a lot of opinions, okay? So the future will be what? Look, there's food on the ground. We can print food in the future, right? You need an apple? Here it is, right? We'll be able to do that. That's probably 5,000 years out, or maybe 5, you know. But let's bring it to 5 years out. And what I want to talk about, to make it relevant to this group, I think it's kind of looking at how did this work? And the element is value, right? It's a coin, but it has the properties of trust, right? And intelligence, right? So I want to look at the intersection of trust, intelligence, and value to get at what can smart money, when your money is smart, right? When you can say, I think, human traffickers, if we catch them, any money they have suddenly ceases to have value, right? We could do that, right? We could design that in our future money. Or if I want to give money to the Brazilian rainforest, I can just say such, and it will go to the Kevin Bacon, right? You guys know the Kevin Bacon 6 degrees of separation, which mathematically links those local webs of trust today, right? The problem is this didn't scale, right? So if you were lucky to be on a good island where people were nice, there was no bullies, you could probably still have this today. You're in the Garden of Eden. We got kind of kicked out though. There was bullies, right? There was bad people that we just kind of learned about. So scaling it though, so this on the right is what I propose. We are living, and if you look at evolution, if we expand the Holocene, life is the evolution and expansion into higher dimensions. And I use that word dimensions, don't be scared. It's a way of measuring degrees of freedom or liberty, right? So what we're doing is we're evolving into higher dimensions as a species with the kind of more theoretical view. But if you look at our institutions, right, they are meta selves, right? So we already are dwelling in a higher dimensional reality. Well, that sounds fancy. Like, you know what I mean if I say, for example, justice. That's a fifth dimensional concept. It doesn't matter what culture you're in, it's a virtue, right? Versus accumulating wealth, like being really rich. We've learned that that's not the best path to happiness. If you ever hung around rich people, there's a lot of them are pretty unhappy, right? So like we fine tune, we all work together, because we're all in it together on the island. Our island now is a planet, right? And we have these collective challenges where, someday my AI is going to tell me I can't have a coffee because I forgot my mug. What am I going to do, right? Because it's my will being projected. It's our collective will being projected, telling us what to do. All right, I'm losing my audience, so I fear. So I'm going to bring it back. So what I have here is this is called a meta object facility. If you have technology friends, this is the most meta geek you can. If you memorize this phrase, you can just you can make it go OMG, right? Which actually in this case means the object meta. Anyone know what that is here? All right. The object meta group. These are the guys that set the fundamental standards of how you design software. And what I'm going to argue here is no matter what use case you're confronted with these emerging cryptocurrencies and trust, where it's injecting trust into our intelligence and value systems, this is your fundamental reference point. where you need to have 6 dimensions. That's all it is. And if you can't map what they're doing to those 6 dimensions, they're missing something and it's going to screw up everything, right? So that's what I'm going to try to show you here. That's a theory. I'm probably wrong, but I want to get that discussion going, okay? So again, here, you guys, anyone read Hobbes, the Leviathan, right? This is this concept where, you know, at once we're we're a whole system composed of thousands of cells, but we're also a cell in a larger organism. So imagine this is kind of a crude rendering of the global augmented intelligence architecture. It's a mouthful. Just remember Gaia, right? So there, you know, if you talk to Ray Kurzweil, he's a futurist who has been making predictions since the 60s. He's hit 80% accuracy on all his predictions. And he says by 2047, we're going to have a superhuman intelligence. And what does that mean? It means we're going to have some like collective intelligence. It can't be divorced from our collective will. Our will be will be the soul of the machine, so to speak. What I'm saying sounds weird to me, so. My point is, where am I going with this? Yeah, I don't want to get too, like, I just came from California. I grew up in Buffalo, so I'm annoying myself already. You got brotherly love. You love me, right? All right, so long story short, so these 6 dimensions, and I want to go through those to allow us to get a hand. Remember I used to use the word holography? Like, that's a fancy way of saying whole systems, right? Where if you go far enough out, you hit the outer edge, but if you were, I suspect if you press the edge of the universe, you'd be pressing up against the quantum foam. That the universe is like an inverted hypersphere in some weird sense. But now I got one person to laugh? No. Topological geometry jokes. Never go over well. All right, so the root is the agent, right? And I'm using the term agent as a proxy for intent. So have you guys heard of the self-driving car? Yes. All right, great, okay. What about the self-owning car? Right, this is where Uber goes to Mercedes. I heard about this from the Santa Fe Institute. They buy a car from Mercedes, they sign the lease over to the car, self-driving car. It goes out on the road, it's driving around, it pays back the loan from Uber, and then what is it? It's a self-owned machine, right? And it's out, and we have to make sure that machine is able to repair itself without any human interactions, right? So we're going to have these agents that are disembodied, and we're already kind of seeing that now, right? We're seeing cryptocurrencies are the manifestation of will outside of our existing consensus structures. They're flawed right now. We're kind of struggling. Honestly, and this is dangerous to say on film, but probably the greatest threat to the planet is the nation state right now, right? And did I go too far? Yeah, I did. I don't know if I believe it. But someone's got a finger on the button, that scares me, right? And if you ever meet people trying to weaponize these robots, anyone read Isaac Asimov? Yeah, we should be lining up those people at the Geneva conference already. Like, if they're arming the swords, that's really, we cannot let everyone should know the 3 laws of robotics from Isaac Asimov. All right, so let's get into it. So we have intents. These intents are nebulous, right? We usually know what we want. We'll get to that. And then collectively, we have consensus on what we do. We're all wearing clothes today, right? And we'll probably do it tomorrow, right? So I'm going to go forward. So space. So space is a concept where let's get a little technical, and I'm trying to avoid it. Any AI, any value, intelligence, trust nexus will have. It needs to be able to have biometrics, right? It needs to be able to access near-field communications. So if I want to just say, I want to give you $5, it would just happen. Like the voice interface, and I'd be able to pass it. I want to send $10,000 to that Brazilian rainforest. Wait a minute, AML laws, right? So depending on, there's going to be, these logic can all be built into the system, right? So space is very important. And what's interesting is every space has a space inside of it. It's a whole on. Like everything has something inside and outside of it. It's a weird property. But you have to, in your specifications of any Ethereum or any of these things, they should be referring to context, because everything's context sensitive. Like gold is the most valuable thing, but if you're in space, you'll trade all the gold in the world for a little air, right? Like those kind of science fiction kind of things that highlight the contextual nature of value. Attributes. This is, Jim had a good, David had a good sort of list of the basic attributes. And Jim taught me, actually. Jim, I said, in a meeting, I said, what's money? And he's like, ran through the 3 things, a store of value, right? Do we know what they are? A transfer mechanism and? Thank you. Yes, so those are attributes. There's other attributes you should be able to, this is just the raw data on stuff, which articulates these change over time. This is the whole financial services industry is a game in time, right? Where we're trying to manage value over time and it changes. So. Then there's objects, and all data from an information theoretic perspective is about things or relationships between things. And that brings me to the other thing, relationships. I'm almost done. I'm actually going to, when I get to the end, I might circle back. But if you guys can tell me to stop, and probably do me a favor. So this is the final part, is a perspective, where value is in the eye of the beholder, right? So all these things, there always has to be, there's no disembodied that Leviathan. It may exist, right? But it'll have a different perception than what we have, and we'll have some kind of dialogue with it. And by the way, the superhuman intelligence, anyone been following AlphaGo Zero? Anyone know that story? All right, so you know the story of Watson, how it beat the best Jeopardy player. Since then, they had they beat, there was a series of games where they're getting progressively more better, where more recently they beat the best human Go player. And Go has more moves than there are atoms in the universe. The trick with that is it's kind of like finding cats in pictures. It's not that complicated. That's sort of relatively monotonic type data. Regulators, like our types of organizations, if you're dealing with complex systems, you have wicked problems. The surfaces are more crenulated, it's more complex, it's not two-dimensional, it's n-dimensional, but not limit to n, it's still measurable. And we need to be, to get superhuman intelligence, so there was AlphaGo Lee, which beat the best human, which took a lot of, was supervised. And then they made a new system, which is untrained, where it's beating the system that beat the best human, it's beating it 100 to 0 with no training, right? They just hit the right secret sauce of algorithms. They teach it the board, they teach it the intent, like to win the game, and they teach it the rules. And if you can teach that to these unsupervised systems, so it's already here, superhuman intelligence is here, and at a scale that's amazing. So these things are coming so fast, and that's where I get anxious and eager, and why I'm just sort of enthusing at you guys about this stuff. So ultimately, you'll have this in your hand. It's another co-evolving technology, along with blockchain and graph databases, and AI is holograms. Like actually, have you guys, anyone here tried on the HoloLens yet? Yeah, there's 1, 2, 3, okay, a few of you. It's amazing. The difference between virtual reality and augmented reality. Like the future, theoretically 5 to 10 years from now when you're in a meeting, you won't be doing this. This is very old school. We'll walk in and we'll be all facing each other, and we'll have, because in the future there'll be only one graph, right? Today's line chart, that was invented in 1850, right? And when William Playfair first introduced it, he had to explain it to people because it was weird. So when you first put on those glasses and see this one chart that has every point of data on the planet that's available, right? And probably right now it's about 300 million data points at any given moment, but we bury them in files and folders. There's not going to be a file and folder. There'll be some kind of interface. It may be this, but it might be something, and I printed this, by the way. You can do this now, it's amazing. You can just hold it and say, I want to look at the space dimension. I want to look at the context around this focus, right? I want to look at this object, right? You'll be able to rotate it in multiple dimensions, right? And it'll have to be more intuitive than this, but I want to get you thinking that there's no files and folders in the future. The page is a 5,000-year-old, it goes back to papyrus. We're going beyond papyrus. We're going beyond systems that are linear. We're going to nonlinear probabilistic spaces. You're probably all comfortable thinking probabilistically. And so we'll all get a hand on the world and hopefully manage it better. How am I on time?
Timing yourself.
Oh, well, I'm going to run out. I'm not going to run out of things to say. I want to introduce. Is there any students in here? There we go. There you are. Yeah. So you guys, this is your future, right? These are 3 cool people. If you like threads to tug on, and Joshua Bach, he's brilliant. He's doing like computational evolutionary biology. Watch his videos. Really amazing stuff about how you build, like not just AI, but orchestrated AI, like complex that are able to do higher order functions. Mark Burgess is the deepest thinker I've ever met yet from a computational perspective on the nature of money. He has what's called promise theory. He's actually a known industry. He's been around a long time. But he has this kind of space-time approach where what happens when all this Internet of Things information is flowing up? How do we harvest all that and get like really amazing kind of abilities to manage systems really efficiently? And then finally, Christopher Allen. So many times today, like You guys remember Zuckerberg was up on stage there, right? And you heard talking about Diffie-Hellman, like those signatures, right? Those handoff things, we did it. You heard the guy from CoinDesk talk about we screwed it up, right? Those guys were on acid. They should have been responsible for that kind of stuff, right? But the future of these things are coming up. They're n-ary. So like if you go to a website, it'll show you your community of trust says this site is bunk. It says EPA, right? But it's actually like what are they called in DC? Like a lobbyist, right? They're out to destroy the EPA, right? Yeah, it'll be hard to have fake news. It'll go away. Like we'll have more honesty imbued in all of our systems. And that self-owning car, that's going to start propagating up to banks, like institutions, right? Like imagine, like if you look at the Fed's charter, there's a section in there, 13A, I think it is, where it talks about someone like an agricultural-backed asset. So someone's going to come to the Fed with a bunch of lawyers and say, I got corn coin, right? And then suddenly we'll have to open a main account for them, right? And then, or some other countries, some central bank will start liberalizing their systems, and that will force all the central banks to, or be a flight to quality. But all right, so that's the last thing I have is 2 envelopes, and I'll end on that. One's got $10 billion in it, literally 10 billion, and one's got $1 in it. Which is worth more, right? Any question? Anyone want to guess? I don't know. I actually don't know the answer, but because it depends on the market, right? Which would be your lens or perspective. Like you might, depending on what you want to give your kid. One's from 1957. I won't say what country. One's more recent. But it could. Which one's our future, right? And how do you insure yourself? Well, you start creating community coins. You create SDR. You do that a little bit better. And you work at it from multiple ends, and you let the ecosystem evolve. You don't crush innovation like the governor from Norway suggested. And that's all. I'll stop there. Thanks.
You see, I follow your approach and I disappear and I said the whole panel was going to run by itself. So metaphysical kind of a thing. But let's go back to the ground. All right, I'm sorry. Well, as we have a few kind of questions. We have some time for questions for the members of the panel. And I have some questions that came from Julapa actually. And let's start with you, Bill. Let's assume that the digital currency will replace the dollar. Let's assume that this is a possibility in the future. Now, does this mean that the Fed can act as a lender for last resort in case where we have a crisis? Is there a possibility for such a thing? Or how would the Fed react to a crisis which needs to be the lender of a last resort?
So if the digital currency completely replaced the dollar so that it was adopted, then you may not have a central bank at all. And if you had a central bank, it would be kind of similar to situations like Israel or some Latin American countries where they've been dollarized. And in those circumstances, it's really not possible for the central bank to act as a lender of last resort. If it was a partially convertible situation, or maybe something analogous to when central banks were on the gold standard, then they quite possibly could. Although generally, when you think about the Bank of England and when it was on the gold standard and operated as a lender of last resort, it did so really by suspending convertibility. I mean, ultimately, it needs to create extra liquid assets to meet the demand for liquidity that takes place in a bad time. So I think the short answer is, if there is a complete conversion to a digital currency, then it's not clear that there's even going to be a central bank.
That's an interesting future. And then, can I ask a follow-up question related to risk? Do you think that digital transactions impose more risk from the perspective of central bank?
So I think what?
That digital transactions, the digital currencies, present additional risk to the economy from the central bank's perspective.
So just to be clear, I think that the prospect of a digital currency taking over, becoming completely adopted in an economy, or virtually zero. If you're in a country that's lost faith in your own currency, what you want is you want something that you can trust and be confident in. And it's not at all clear that a digital currency is going to be where you're going to turn. Probably you're going to turn to the dollar, frankly. But are there financial stability risks that a central bank needs to consider because of digital currencies? Well, as I mentioned right now, I don't think there are material ones in the United States, but ultimately, any speculative asset, any large enough asset that's backed by leverage and that's linked to the core of the financial system can be very dangerous. That doesn't currently seem to be the case.
Interesting. Very good. Isabella, you talk about blockchains, and I think one of the questions, thank you very much for this one. I appreciate it.
Thank you for the question.
Isabella, you talk about blockchains, and actually your company is involved in a software building blockchain technology. And I think one of the questions that comes in mind is what is needed for the blockchain technology to be further developed? Is there something that is needed that we don't have it now, or something that you foresee in the future that will accelerate the blockchain technology to be developed?
Yeah, and I'll answer that question from the, is this on?
Yes, it's on, but
Okay.
can you bring it closer?
Yeah, I'll answer that question from the perspective of R3, obviously, as we are building a solution that is permissioned and has limited data sharing, so it's a little different from the other technologies in that sense. But I think that we probably all need the same thing generally, which is participation by regulators. And when I say regulators, I mean regulators, central banks, policymakers in the technology. So active engagement, being in this room, learning about it, understanding it, so that we can figure out how it can develop in a safe environment, how we can make sure that regulators are comfortable with it, how users of it can be confident that they can actually use it and that it is okay and that regulators believe in it. So we need the whole ecosystem to continue working together. And that means we have to do our part, and we have to issue spot, and we have to find parts of the regulations around the world that make it difficult or uncertain for us. And we ask for regulators to do their part and participate with us. We have more than 20 regulator members at this point. It's nice to see a lot of familiar faces of regulators in this room, and so just more of that, more engagement, I think is what we need.
So more engagement, more regulation, or perhaps?
More engagement by regulators, more engagement on our side and theirs. Not more regulation necessarily, although we're talking about, at least from R3, regulated entities transacting regulated instruments on regulated venues. It's not as though it's the Wild West when you're talking about the use cases that I referenced earlier in my slides. But there may be a need for tailoring regulation. There may be a need for new regulation. If there are parts that are unregulated and regulators feel need to be addressed, we are happy to provide our input on that. We are happy to assist in that process. It's just working together to figure out changes that need to be made, new rules that need to be made. If some rules need to be, stricken because they're out of date, that's possible too. For example, the idea of having wet signatures. That's getting a little tough these days, right? Like, we aren't passing around pens and using DHL. Unfortunately, in some cases we are, but it's time to move forward from that.
Thank you very much. And I think I will ask a question to Yaya, and this is about decentralized platforms. Are there issues of illicit activity in decentralized platforms that are very prevalent?
Yeah, well, I think it's the issue with decentralized platforms is they are growing. So if you think about, how most people purchase cryptocurrencies today, it's usually through centralized exchanges, right? And that's traditional model where you've got a business, They take accounts and they take people's money and they hold the tokens, they hold the private keys, and we have a very good way of dealing with that from a law enforcement, anti-money laundering point of view, which is what we do with banks and other things, right? You send someone to go talk to that CEO and the security folks and give them a subpoena, and you can interdict if you need to with legal cause. That's how most of the crypto trading, crypto world works. What's growing, which is small, but is growing, is the idea of a decentralized exchange. So platforms where the software is being created, the platform is being created where there may not be someone who's a custodian of those accounts and of those tokens and those private keys. They're just providing a way for people to trade, and that may help might be good for some reasons. But it does raise some questions. It raises questions about how do you address that. One thing I'll say though is I think we have to keep in mind that first of all, crime is not going away ever, right? It hasn't since the dawn of time. We've always had crime on some level. So we have to keep in mind that with any technology, it's not like illicit activity is ever going to go away. I think what we have to do is think about again, put it on people. Right, more than just technology. Think about how do we deal with the cyber security in general, cyber issues and hacking. We've been able to develop, good folks who understand hacking, who are white hat hackers, and they help to counter the illicit hacking, right? The illicit cyber activity. I think there should be something very similar in crypto. So there probably is going to have to be a cultural, if not a shift, just cultural development, maturity, change, so that we don't have an industry that just looks at countering illicit finance as being something that they don't want to do, they just want to do the technology. There's going to have to be a maturity where those who care the most about the technology are helping to keep bad actors, or at least to make it more difficult for bad actors. I think that has to happen.
Thank you very much. And
I can react to, let's
Okay,
get a little
please.
dialogue, because I agree and disagree on different aspects. So I do think there will be a digital currency, and whether there will be or not, regulators should assume there will be, because this is one of those things that we can't control. Like if everyone tomorrow decides California doesn't exist, it's an arbitrary, culture is arbitrary conceptual constructs. Money is that, right? So everyone could just decide we want to do time coin, where everyone gets, for every day you've been alive, you get a day coin, right? And suddenly we were living in some egalitarian system. There are actually, there are people literally working on this right now, right? And it's this emerging ecosystem. You go into these worlds, and what's interesting is these kids, Sand Hill Road is really freaking out, because these kids don't want to make money. They want to change the world, right? This generation coming through, like each one gets smarter than us, right? And they're really pushing out. So we have to assume there's going to be, if we're assuming it's going to be disruptive, then we're looking at it the wrong way. We should be welcoming it with open arms, because we're kind of becoming the dinosaurs in a rapid evolution. And so I think I'm going to challenge you on that. I'm also going to challenge the idea, if we end up making a Jeff Bezos out of the blockchain revolution, you were in the panel where this came up. I love that line. Be skeptical of private blockchains. They may be good for 50, 100 years. You guys may make a lot of money, but the ultimate end state is it's a utility. No one should own the commons, right? That's the whole point of the commons. It's the collective, and that's the next generation of the internet. So, and then finally, the bad players, they're what's going to force this stuff to. They're good for the ecosystem because they force us to evolve.
And in this setting, in a digital environment, what would be the role, in your view, of the central bank?
Good question. I don't know. I mean, I think there will be a role. Like, hey, remember, we're in the era where we're building wagons, and we're like, oh, here's this new shiny thing. We can build a car. Well, people are out there potentially building rockets, right? And there'll still need to be a central control with rockets in some capacity. Some of the interest, like, if you guys heard of Definity, check them out. They have these adaptive policies where the DAO failed because the policies were written in code, right? The policies so future policy should be like an evolving thing where you define principles and then you define standards, and then everything else between that is, are we meeting the rule thou shalt not hurt each other, right? Be nice to each other, or whatever you want to pick. And then everything else can be, like, we adapt. And AI and stuff, it's all just adaptive systems. So how do we accelerate adaptation to increase wealth and the economy?
I don't know exactly, but I will invite questions from the audience. Yes.
And Mike, so you mentioned the goal, for instance, and the game, and the fact that we were unable to determine the moves that the computer took. Because they played, I can't remember, 1,000, 10,000 games against each other, and developed it within the neural network, developed its own strategies that were superhuman. They were not human.
Yes.
No one had ever thought of the strategies that the computer ended up using. Okay, move that now into the digital currency domain, and where we create those kinds of systems, and all of a sudden, on a global basis, or even on a national basis, they started creating decisions, actions, because of the concept of the neural network. We have absolutely no idea what they're going to do, or do we know why they're going to do it? We have absolutely no concept. So from a tort system, a regulatory system, what does that do?
One of my favorite quotes from my researching central banks is, we live in an interdependent, independent world. And living at the Fed, anyone from the Fed will know that we live and breathe that, right? But you don't need to be at the Fed to know that. Like you're like, that's what we are. We're independent. We're free to do what we please, but we have to work well with each other. So how do you project sovereignty, right? And how do you achieve consensus at scale? Whether you're dealing with the globe, and you heard like a motion that CPMI is saying that, hey, did you hear that sneaky little thing they said? That was the Illuminati coming at us, right? Where hey, like, we're going to lose. The globe has to be managed as a unit, right? We're on an island, right? And if there's bullies, we have to work together to fix that and all that stuff, right? And the days of having 11 aircraft carriers are kind of expensive, right? I don't know if I'm answering your question, but
I'm not sure there is an answer at this point, but it's a real concern that I have. I wish there was an answer.
Well, you're seeing it with AI too, right? Where AI systems are talking to each other and creating their own language.
That's right, because you hear that Facebook thing where they had to shut it down because they were sending messages. And look up Cleverbot. There's a brilliant Turing test moment where they have two Cleverbots, and they start so I think you're a robot. Oh yeah, you believe in God? Are you God? It's this really weird. If you just listen, I've listened to it 3 times, and I'm like, there's something going on there, right? And you got who's the guy with the rockets? Yeah. He thinks we're a hologram, and probabilistically we are living in a game of a game of a game, right? That's the highest probability likelihood, is that we are a video game for some other dimension, but don't worry, they are too. It's turtles all the way down.
It's the Matrix on steroids.
Yeah. The real thing we should be doing is we should be making games and that's what it is, finding risk. It's a game, right? And we should gamify it, make it fun, and as you write the rules, because the most interesting game is the infinite game, where you create the rules of the game. So if you data management at any institution, you should be writing down your metadata, you should be writing your data, you should be writing down your process, your business process management, codify it, then you can feed it to the AI, and you get, Google has a policy, AI first. You don't touch anything unless you can try to apply AI. Because no one likes to do put the paper in the fax machine, right? But we're still doing it, right? It's some of us, right? But anyway, sorry. Outlaw fax machines, save a tree.
Take another question.
Yes, could you explain how the government tracks and taxes any profits on Bitcoin, and further, what do we do about money laundering?
I mean, I'll just take a stab at it. So how does the government has not, U.S. government has not figured out, isn't giving guidance on how to do it. The U.S. government, or the IRS, is just saying that you do have to declare your gains from your cryptocurrency transactions. And they're just putting that out there, and it's really left up for the crypto community and for the holders of crypto tokens to figure out what that means. I think that's an evolving sort of area of tax law.
But they're not sending me a W-2 or 1099.
No, they're not. No, not yet.
There's not even a way to go back and understand your
Money
transaction.
laundering, same scenario?
So, but what's specifically your question about money laundering?
Well, how do we track it?
So
I
interesting.
mean, it just seems
You know,
right for money
It
laundering.
is.
Yeah, so there's what I'll say is this, actually, this is a point I didn't get to say in my presentation, which is, I was talking so much about terrorism financing, which I should have emphasized more, that this is a drop in the bucket, right? This is not really a big thing for terrorists to use. And as I'm sort of observing and trying to track how how this stuff works, I would say laundering is probably the best application in terms of illicit finance for a whole variety of illicit activity, because it's just another way of a potential way of obfuscating. So if you have illicit money from, let's say, drugs, because that question often comes up. Will drug cartels be using this? We haven't seen a lot of that because of, drug cartels have hundreds and hundreds of millions of dollars, right, that they're dealing with. The crypto space is not big enough for you to, it's not suitable to use cryptocurrency to launder when you already have banks and shell companies. North Korea, another great example, right? Yeah, they're stealing Bitcoin a little bit, but really for the stuff for the money they're trying to get, it's really the shipping companies and banks, Chinese banks that they're working with. That's really the way to move to really launder money. But I will say that yes, as people become more aware of this technology, yeah, there's experimentation. We do see people trying to figure out ways to use it. The benefit from a tracking perspective is certainly cryptocurrencies like Bitcoin, in particular Ethereum, are very trackable. And in fact, I'll tell you one little anecdote which really shows the dilemma that we're in. So I told you about how we were tracking this terrorist group and looking at their transactions. We could figure out where the money had moved, even though we didn't know the identities. You could just go to the browser and it gives you the list of transactions. Well, there's another cryptocurrency called Monero, which is more private, and it's less trackable. If you go to their block explorer where you get someone's address and you try to see what they have, you click on it, you can see that this is an actual address, but then when you click on it to see, it's not like Bitcoin. Bitcoin shows you all the transactions. In fact, it comes up with a message that, I'm paraphrasing, but it basically says this. It says, dude, you can't look at this guy's money. This is Monero. We don't allow that. That's what it says. That's the message that comes up. Because they're trying to fight against the de-anonymization. So it is an issue that we're going to have to reconcile and deal with.
And I would just add to what you're saying is with the marijuana laws that are now state approved but federally not approved, we're starting to see some movement in the Bitcoin to, I don't know if launder is the right word, but to circulate the money made through the marijuana trade.
You mean you can smoke electronically now?
Yeah.
Only in Mike's world.
Yeah. You need the HoloLens.
Aren't you from Massachusetts?
That's a hell. Yeah.
We might have one more question before we close the session. Yes, sir.
Can anybody on the panel or in the room give a thumbnail sketch of what's happening in Russia with cryptocurrencies? When I say Russia, private or government?
I can say one quick thing, because I actually have been very interested in this. Russia there's been an evolution. 3 years ago, the Russian parliament was actually talking about making it illegal to do a Bitcoin business, right? Bitcoin in particular was seen as a threat, and there were bold statements from the bank, from the central bank, saying no Bitcoin, we're not going to allow Bitcoin. Somewhere in around 2016 and then definitely 2017, you started to see people talk more about blockchain in Russia, high-level officials. Putin had a chance meeting with the founder of Ethereum. And you start to actually hear government officials, Russian officials, say outright, we should use this technology to evade the sanctions of the US and the EU. I'd say in the past couple of years, Russia has been investing in blockchain technology. Again, that's not bad, and everyone should invest in this. But I think there is a context to show that Russia is definitely incentivized to create an alternative system. I think that's part of what they're trying to do, an alternative way for their banks to transfer internationally. I think them being involved in Venezuela is playing into that. I mean, they are incentivized to say, oh, Venezuela, yeah, maybe we'll help you with this because this fits into a broader plan. And I don't want to get conspiracy theorists, but yeah, Russia is definitely investing in blockchain technology more so than cryptocurrencies, even though there is talk about having a crypto ruble, but that's a side.
I got to jump in here. Just a word of caution for people dealing with critical infrastructure systems. You heard that little interaction. I don't know, was that we were talking about quantum computing, where he said, if, right? That's what the crypto hype wants you to. It's if. If you hear them say that, it's very, very, tread carefully because there's never been a cipher that's not been broken. You can't pull the cipher. When they get elliptic, and guess what? They probably have. Like if you have enough CPU, right? So, and you start to look at some of the source of these things, like, hey, wouldn't it be great with all this disinformation out there? So, like, get people all excited, you put all your critical 14, 17 critical infrastructures on these new systems, which are better than the past. But just make sure that if you're going to put your critical systems on these, you can pull out the cryptography algorithm like that. Not like, oh, we got to deploy. You know, it's going to take us 6 months to deploy, and by the way, our entire systems are all exposed. So yeah, watch the source of these things, be careful, and be aware that we're in an era when we can't trust in information anymore.
Thank you, and
Just a quick question from Mike. I'd like to know if you're tied in with Tesla, because I'd like to know what your battery is.
It's called the red eye.
It's the red eye. Yeah. Come visit in California, I'll get you a coffee, and you'll know.
well, Bill, Isabelle, Yaya, and Mike, we thank you very much for this panel. And,